Are Americans really running out of money? Well, let's take a look. In the beginning of 2024, all the big headlines said that Americans are running out of money because inflation has been outpacing wages. Then just a few weeks ago in August, this was confirmed by the Federal Reserve Bank when they reported that low-income and middle-income Americans are running out of money because they're digging into their disposable cash. And now here we are in September, and it almost feels like two different stories are playing out. On one hand, you have discount stores like Dollar General saying that Americans can't even afford the discount dollar store anymore. And then on the other hand, you have a growing number of Americans saying that I'm getting stressed out about money, so I'm going to take a vacation to Japan. Now, the reason why this topic is so important for you to understand isn't just so you know if your broke cousin Bunty can really afford that vacation or if he's financing it with his Amex. It's because our economy runs on spending. We know that when Americans have access to money, and this money is the money that you earn, the cash in your bank account, but this is also the credit that you can qualify for. Your credit cards, your loans, your home equity lines of credit. When you have money to spend, Americans will spend it, and that means you have more money to spend at Chipotle, you have more money to spend at Gucci, you have more money to spend at Amazon, which means that these companies have money to hire more employees and grow their businesses. But when Americans start to run out of money, either because they start to run out of savings, they don't have enough income to keep spending, or they can no longer qualify for more credit, well, that means spending also slows down. That means you're no longer buying the extra guac. Maybe you're not even buying the burritos from Chipotle, you're not shopping at Gucci, and you're no longer shopping on Amazon. And that means these companies might have to let employees go, and they have to start downsizing, which hurts the economy. And of course, all of these things affect you because it can affect your business, it can affect your job, and it can affect your investments. So what I want to do today is I want to talk about three things. Number one is I really want to answer this question and dig into, are Americans broke or do they suddenly have more cash to spend? Number two, I want to talk about what's going on with our economy and where is our economy today because we got some new data. And number three, how can you find some extra money during this time where inflation is still around and is still hurting people? So let's jump into this. Are Americans broke? According to the Federal Reserve Bank, Americans are saving the least amount of money that they have in the last 10 years. There are two reasons why Americans might be saving less money. Reason number one is I have too much money. I have too much money saved, so I don't need to save any more money. And reason number two is I can't afford to save any more money, so I have to spend more of my income. So let's dig into which one of these two things are happening. And after some digging, I found this. Between 2020 and the middle part of 2021, Americans were saving more money. There was a net positive amount of savings, but then between mid-2021 and now, saving balances in the United States have been decreasing month after month after month. That means right now in 2024, Americans are saving the least amount of money that we have seen in the last decade. And the reason why it seems why Americans are saving less money is because they cannot afford to keep saving more money because more and more Americans are digging into their savings because we're seeing saving levels deplete. And this is where you might say, well, Jaspreet, if Americans can't afford to save money, isn't that bad for the economy? Well, we got to take a step back and remember what I said just a minute ago. How does spending happen in the economy? You can spend money that you earn, but you can also spend credit. See, when you walk into Chipotle and you buy that $12 burrito bowl, they don't care if you're gonna pay with cash or a debit card or a credit card or if you carry your credit card balance or not. All they care is that they get the money. Now, after you pay the money, that's when the onus falls on you. Because if you pay cash, well, then you can afford it. But if you don't have the money to afford it and you put it on your credit card, well, now you got to pay this money back plus interest to the credit card company, and this becomes a problem for you. But it's no longer a problem for Chipotle because they already got their money. So what we can confidently establish through the data that we've been given is that number one, Americans are saving less money today than they were over the last 10 years. Why? Because they can't afford to keep saving money. And number two is that Americans are also digging into their savings. Savings account balances have been shrinking, which might make you wonder, well, how do people keep affording to spend money? Well, remember, Americans can spend money that they have or they can spend credit, which means we need to dig into what's going on with credit. And if you've been reading Market Briefs, my free financial newsletter, you might have heard us talk about this, but let's take a little bit of a deep dive into where the credit state of the economy is. In May 2024, the Federal Reserve Bank put out a report saying that more Americans are falling behind on their credit card bills, and more specifically, almost 1 in 5 cardholders are maxed out, using at least 90% of their credit card limits. In other words, we're seeing a growing number of people also max out their credit cards, which might have you wondering, how do people keep affording all their spending? Now, by the way, if you want to stay up to date on what's happening in the economy, when it's happening, you can join Market Briefs. It's my free financial newsletter where every day my team's breaking down what's happening in the economy, the housing market, the stock market, crypto, and the global economy into a fun, witty, and easy to read newsletter. You can read it in less than 5 minutes every morning, and more than 250,000 investors are reading it every morning. So if you have not joined Market Briefs yet, I got the link for you to join down in the description below. And the answer to this question of how Americans keep affording to spend all this money has baffled a lot of economists, but the answer might be above you or below you. In your house. Housing prices are still rising and we are still at or near record highs. What that means is if you own your house, you might have some newfound equity in your house. And unfortunately for consumers, but fortunately for the economy, some Americans look at their home as a free checkings account. And over the last 6 to 9 months, as mortgage rates have begun to fall, many people have used this as an opportunity to pull out some cash out of their homes through a refinance because mortgage rates have fallen and home values have gone up. So it's a way for people to tap into this equity and have some more cash in their pockets today. That's good for the economy because that means you have more money to spend. It's good for the stock market because that means companies are making bigger profits. That's good for your mortgage lender because they get to close more commissions. But that's not so good for you if you're paying interest to buy things that aren't making you any money. Which brings us to number 2. What's going on with the economy right now? The United States economy is measured through a number called GDP, which is essentially a measure of all the spending that happens in our economy. And the most recent GDP numbers say that our economy is growing faster than we expected. This is where things start to get interesting because now we have to ask the question of what is fueling the spending in our economy? We know consumer spending happens when people spend money or when they spend credit, which is what we just talked about, but that's only 70% of our GDP. So what makes up the other 30% of the GDP? Well, this is spending done by none other than the government. But let's focus in on consumer spending for just a minute, and then I'm going to talk about this government spending, which makes up our economy or GDP. According to the data, consumer spending rose at a 2.9% annual rate last quarter. That's up from the 2.3% in the government's initial estimate. What does that mean? It means that Americans are spending more money than even what the government thinks. And part of this has to do with more credit spending because we know that Americans are digging into their savings and they're saving less money. So Americans are spending money that they don't have. But what about government spending? How is that impacting the economy? Well, according to the Treasury Department, the United States government has spent $5.6 trillion in the fiscal year 2024 to ensure the well-being of the people inside the United States. What that means, without getting too technical, is that government spending is growing. Now, the concern that people have about this is that the government is financing a lot of the spending because the United States government doesn't have the money to fund all of the spending, so they go into debt, which is what our national debt is. And this national debt level is rising faster year over year. This is our national deficit because the United States government spends more money than what they bring in through tax dollars. So some people are concerned that this is going to make the inflation problem worse, and it makes our economy dependent on government spending as opposed to private entities spending. But instead of focusing in on that, let's talk about now, if the government spending is increasing and people and businesses are spending money, why are people concerned about the economy? Why are people talking about a potential recession? Well, let's dig into the biggest concern that people have right now, which has to do with the job market. Because what we've been seeing is that employers are hiring less people than expected and more people are getting laid off. In other words, we're seeing a cooling happen in the job market right now. And along with that, we've also been seeing wage growth steadily start to decrease. So the job market is cooling, employers are hiring less people, they're not giving the same pay growth that they were before, and this has people concerned about the economy because if people are not getting jobs, well then they're not going to have the ability to spend. If they don't have the ability to spend, they might not have the ability to buy the extra guac, which can then impact the GDP. That's why everything is related. Now, of course, everybody has an opinion as to what this means. Some people say that this means that a recession is coming. Some people say that this means that, well, it's just to cool down after the big boom that we had after the pandemic, especially because it's an election year. The opinions and emotions are running hot. But what I want you to do is understand, regardless of the emotions, What does this mean, and how can you find the opportunity? Because this brings us to part 3, how can you find that extra money? Now, if you've been watching my videos, you understand that the way that you build wealth is by investing your money. If you're not subscribed yet, you should probably do so. But if you want to take advantage of investment opportunities, you got to understand 3 things. Number 1, how to be financially prepared, financially educated, and then number 3, understand the financial trends. When I talk about being financially prepared, this means having money to take advantage of investment opportunities. Because if you saw a great investment opportunity tomorrow, and you didn't have any money to invest, it doesn't matter how much education you have, it doesn't matter if you understand the financial trends, you can't take advantage of that opportunity. And that means the first thing you gotta do is just start preparing. And that means number 1, build some cash savings. Have a cash savings to protect you against an emergency, and have cash savings to be able to take advantage of investment opportunities. You want to have some sort of system that way no matter how much money you make, you're always investing some money, you're always saving some money. A simple rule of thumb that you could potentially start with that I like to teach is a 75-15-10 plan. Now, I got to give you this disclaimer because I'm just a random guy on YouTube. Okay, I'm not a financial advisor. You got to do your own research, and if you have specific questions, talk to a financial advisor in your area. Investing has risks. You're never guaranteed to make money when you invest. Okay? What the 75-15-10 plan says is for every dollar that you earn from here on out, the most that you can spend is 75 cents. The minimum that you invest is 15 cents, and the minimum that you save is 10 cents. Why? This way you always pay yourself first. That means you always have some money saved, and you always put money aside to invest. That way you don't accidentally spend all of your money. Now, when you do this, you have 3 different bank accounts. This way, you don't accidentally spend your investment money. You have 3 different bank accounts. This investment money is either automatically invested or is waiting there to be invested. This money is sitting there to protect you. But now you have money to invest. That way you are financially prepared, and then you start investing in your financial education. That means understanding now how do you analyze your investments? What is your investment strategy? What it is that you want to invest in? Do you want to invest in stocks? Do you want to invest in real estate? What is it you want to invest in? Are you going to be a dollar cost average investor investing in index funds and ETFs? Or are you going to invest in individual companies? What is it that you want to invest in, and how are you going to analyze those investments? That is your financial education. I have a lot of videos on my channel that go over this as well. And then understanding the financial trends, which is what type of industries do you want to invest in? Think of it this way. When I go out and I invest in real estate, I'm looking for neighborhoods where people are moving into and where money is moving into. Why? Because those are going to be the areas that see the biggest growth in population, the biggest rent growth, and the biggest upside. It's the same thing if you invest in stocks. Find the industries where the money is moving into. Pay attention to those financial trends. Now, we have a free newsletter called Market Briefs, which breaks down what's happening in the financial news. For those of you that are a little bit more sophisticated and want a breakdown of these financial trends, we have a paid newsletter called Market Briefs Pro. Check it out if that's something that you're interested in, but start with Market Briefs because that's free, and then see if you want more. But this is where you got to understand every time you see craziness in the markets, it creates opportunity, but the only people that can take advantage of those opportunities are those that are prepared, educated, and understand the financial trends. When the majority of people make money, they then start to wonder what they should do with this money, versus wealthy people already have a plan in place. So let me ask you a question. If your boss gave you a $1,000 bonus tomorrow, what would you do with that money? And let's make it a little bit more juicy. What if tomorrow, instead of getting a $1,000 bonus from your boss, I write you a check for $1 million? What would you do?